Welcome back to the Profitable Mindset Podcast, everybody. Today we're getting into Forex trading. We're going way past the basics, so you can trade Forex like a pro.
Yeah, we're going to make sure that you have all the knowledge and all the strategies you need. It really doesn't have to be as complicated as a lot of people make it out to be.
Right. So let's start with the foundation. I mean, the Forex market is unlike any other market.
It's a beast of a market. It's absolutely gigantic.
Yeah.
I mean, we're talking trillions of dollars exchanging hands every single day. Dwarfs the stock market. It's so liquid. You can enter and exit trades super quickly. Doesn't even really impact the price that much.
Yeah, and unlike the stock market, you're not limited by trading hours.
Exactly. It runs 245.
Oh, wow.
Across global time zones.
Okay.
So you can really trade whenever you want.
Oh, that's fantastic. Now, one concept that you always hear about with Forex is leverage. Can you explain that?
Leverage allows you to control a huge position with a small amount of capital. So imagine you only have $1,000 in your account.
Okay.
And your broker gives you 50.1 leverage. You can control $50,000.
Wow.
Yeah.
That sounds like a huge multiplier. I mean, how could that not be good for your profits?
Well, it can be. It can be a really powerful tool. But you got to be careful because it also multiplies your losses.
Ah, okay. So it's a double-edged sword.
Exactly.
You got to really know what you're doing.
You really have to be on top of your risk management.
Okay. Well, before we get into all that, let's just kind of go over some of the terminology so that everybody is on the same page.
Okay. Sounds good.
What are some key terms that every trader needs to understand?
So the very first one you need to know is currency pairs.
Okay.
They're kind of like the heart of Forex trading.
Okay.
And every pair represents the exchange rate between two different currencies.
Gotcha.
So for instance, you got your Euro USD. That represents the euro against the US dollar.
Okay. So when you're trading Forex, you're kind of betting on which one is going to strengthen or weaken against the other.
That's exactly right.
Okay. Now, I always hear the word pips being thrown around. What's a pip?
A pip stands for point in percentage. It's the smallest price change that a currency pair can make.
So even a tiny little fluctuation can make a big difference when you're talking about pips.
Right. And that's why position sizing is so important.
Okay.
That's where lots come in. So a lot is a standardized unit of currency.
Okay.
There are a bunch of different sizes. So you got your standard lot, 100,000 units, mini lots, 10,000, and then even smaller micro lots.
Gotcha.
Which are 1,000.
So this really helps you to manage your risk.
Exactly.
So if you're starting out, you're probably not going to go in with a standard lot, right?
Probably not a good idea.
Stick to the minis and the micros.
Definitely start small. That way you don't blow up your account.
Right.
Get a good feel for how the pips move and how much you can actually gain or lose.
Okay, so we've covered currency pairs, pips, and lots.
Yeah.
But before we even think about actually making a trade, we need to make sure that we set ourselves up for success.
We definitely do. We want to make sure we have the right broker.
Okay.
Get familiar with the trading platform.
Okay.
And build a rock-solid trading plan.
Okay, let's talk about brokers. What should traders consider when making this decision?
So the most important thing is going to be regulation and security.
Okay.
You want to make sure that whoever you're working with, they're licensed, they're regulated by a reputable financial authority.
Yeah. There's a lot of scams out there.
Oh, tons of them.
So you got to make sure you're protected.
Yeah. And the broker is actually adhering to those financial standards.
Okay. And then beyond that?
Beyond that, you want to consider trading costs.
Okay.
You know, some brokers, they charge what's called spreads, which is the difference between the bid and the ask price for a currency pair. But then some others might charge you a commission per trade.
Okay. You really got to shop around.
Shop around, yeah. Do your research.
Find what's going to be the best for your style of trading.
Okay.
And your budget.
And then what about the trading platform?
So yeah, the platform itself, you want to make sure it has all the bells and whistles that you need.
Okay.
It's got to have good charting capabilities.
Okay.
Real-time data feeds, technical indicators, all that good stuff.
What about MetaTrader? I hear that's a popular choice.
MetaTrader is super popular. It's got great charting tools.
Yeah.
A lot of technical indicators.
Okay.
You can even automate your trading strategies.
Oh, wow.
It's really versatile.
Okay, so it's like your command center.
Yeah. Think of it that way.
For analyzing the market.
Yes.
And actually executing the trades.
That's exactly it.
Okay, so we've got our broker, we've got our platform.
Yes.
We've got to develop a trading plan.
We do.
Why is that so important?
It's going to be your roadmap.
Okay.
It's going to tell you where to go, how to get there.
Yeah. It's going to outline all your goals, your risk tolerance,
Okay.
your entry and exit strategies, money management.
So it's not just about making the trade. It's about how you go about it.
Exactly. It takes the emotion out of it.
Okay.
You want to stay disciplined, especially when the market gets a little crazy.
Yeah, because it does get crazy.
Oh, yeah.
Well, speaking of crazy markets, let's talk about price action trading.
Okay, so price action trading, this is like reading the market's language.
Okay.
You understand how price moves.
Okay.
And then you identify the patterns.
Okay.
And then based on that, you can kind of predict future price movements.
Okay, so it's about looking beyond the indicators and actually looking at the raw data.
Exactly.
All right.
Going straight to the source.
Okay. Now, I've heard of candlestick patterns, but they seem kind of complicated.
They seem intimidating.
Yeah.
But they're pretty intuitive once you get to know them.
Okay.
So each candlestick, that represents the price action over a specific time frame. And it shows you the opening price, the closing price, the high and the low.
Okay, yeah, I can visualize that.
Yeah.
But how do these patterns actually help us trade?
So certain patterns, they can give us clues about potential reversals or continuations.
Got it.
And that's when they form in confluence with other technical signals.
Okay, give me an example.
Okay, so for instance, you got the hammer pattern.
Okay.
It's a bullish reversal.
Okay.
It forms at the bottom of a downtrend.
So if you see a hammer after a downtrend, that's a signal that maybe things are turning around.
Maybe the sellers are starting to get tired.
Okay.
The buyers are stepping in.
Okay.
Then you have the engulfing pattern.
Okay.
Imagine you have a small bearish candlestick,
Okay.
and then it's followed by this big bullish candlestick that just engulfs that previous one.
Wow, so it's like the buyers have totally overtaken the sellers.
That's a great way to put it.
Oh, okay.
And those are just two examples. There's a whole bunch more.
Okay, so by learning these patterns, we can kind of decode the market.
Yes.
And anticipate what's going to happen.
Precisely.
Okay, but remember, price action is just one piece of the puzzle.
Right.
To really be successful in Forex trading, we got to look at fundamentals.
Absolutely. The fundamentals are going to paint that bigger picture.
Okay, so give me some examples of those fundamentals. What are we looking at?
So first of all, economic growth.
Okay.
So countries with strong economies, they usually have a strong currency.
Makes sense.
Right. So if a country is booming,
Yeah.
its currency is probably going to appreciate in value.
Okay, and then opposite if the economy is not doing so hot.
Exactly. It'll depreciate.
Okay, what else?
Interest rates.
Okay.
Now, central banks, they set those interest rates to control inflation
Okay.
and to try and stimulate economic growth.
So if the central bank raises those interest rates, what happens?
That makes it more attractive to foreign investors.
Okay.
And that could lead to an increase in demand and then a stronger currency.
Okay, so it's all connected.
Yeah, it is.
Okay, so we've got economic growth, we've got interest rates.
Yep.
What about geopolitical events?
Oh, those are a big one.
Okay.
That could be anything. Political instability, elections, wars, trade agreements, natural disasters. All of that stuff creates a lot of uncertainty.
Okay.
Which leads to volatility
Yeah.
and a lot of big price swings.
Okay, so it's not just about crunching the numbers and looking at charts.
It's not that simple.
You have to stay informed about what's going on globally.
You have to. It's a global market. You
Yeah.
have to stay informed.
Okay, so we've covered currency pairs, leverage, price action, fundamental analysis.
Right.
But what about the mental game?
Oh, that's the most important.
Right.
A lot of people don't really talk about it.
Yeah.
But it's huge.
Yeah.
I mean, you can have the best technical analysis in the world, but if you're not mentally in the game, you're going to make mistakes.
Right, and a lot of times those are costly mistakes. Oh, absolutely.
So how do you manage your emotions?
Well, there are two big ones that sabotage a lot of traders.
Okay.
Fear and greed.
Okay, so how does fear play into it?
Fear will make you hesitate.
Okay.
Even when everything looks good.
Okay.
It'll make you second guess yourself.
Okay.
And you'll miss out on good opportunities.
Okay, and greed.
Greed is going to make you hold on for too long.
Okay.
Or it'll make you over leverage.
Okay.
And then you end up losing way more than you should.
Okay, so what can you do? What do professional traders do to manage those emotions?
Well, first of all, have a solid trading plan.
Okay.
And follow it.
Okay.
It's going to outline your entry rules, your exit rules, your risk management.
So basically you're setting up boundaries for yourself ahead of time.
Yeah, exactly.
That makes sense. You got to take the emotion out of it.
Okay. What else?
Keep a trading journal.
Right. Like a Diary.
Yeah, a diary for your trades.
Okay.
And this is where you're going to track not only your wins and your losses, but also how you feel during those trades.
Oh, okay.
So you can really start to see those patterns.
Okay.
If you tend to make a bad decision after a loss, you can figure out how to counteract that.
Okay.
Become more self-aware.
And just take breaks.
Take breaks, yeah.
Get away from the screen.
Definitely.
Because sometimes you just get sucked in.
Oh, it's like a vortex.
Yeah, babe.
It sucks you right in.
Well, this has been great. This is so much information. We've covered so much ground, but we're just getting started.
Just getting warmed up.
We'll be back in the next segment to talk more about the world of professional Forex trading. Stay tuned.
We'll see you there. So in our last segment, we were talking about the mental game of trading. It's so important to stay disciplined and keep those emotions in check. And one really cool tool that can help you with that is algo trading.
Okay, so algo trading. I've heard that term thrown around.
It's becoming super popular.
Okay.
It's short for algorithmic trading.
Okay.
And it's basically automating your strategies. Well,
with computer programs.
Okay, so you don't actually have to sit there and watch the charts all day.
You don't. You can have your little robot doing it for you.
Okay.
Sometimes they're called trading robots or expert advisors.
Okay.
And they can analyze tons of data. They can find those trading signals and execute those trades so much faster than a human ever could.
Okay, so it sounds like a super powerful tool.
It is. It's very powerful.
But I imagine you have to have some pretty serious programming skills to create those.
It can be pretty complex.
Yeah.
But luckily, there's a lot of platforms and resources out there that make it easier, even if you're not a coding expert.
Like what?
So like MetaTrader, that platform we talked about earlier, it's got a built-in language, MQL4, that's specifically designed for creating those trading robots.
Oh, okay.
So it's kind of tailored to traders.
Okay, so I don't need a computer science degree.
You don't.
To get involved with algo trading.
No, not at all.
You can even find pre-built trading robots.
Oh, okay.
You can buy them. You can download them for free.
Okay, so let's say I found one that looks pretty good.
Okay.
Can I just start using it right away?
You definitely want to test it first.
Okay, yeah, that makes sense.
You don't want to throw it on your live account without testing it out.
So how do you test it?
You back test it.
Right, like we talked about with developing a trading plan.
It's the same concept.
Okay.
But now you're applying it to the algorithm.
Gotcha.
So you run it on historical data.
Okay.
See how it would have performed in the past.
Okay, so you're basically simulating.
Exactly.
What if it happened?
It's a dress rehearsal.
Okay.
For your robot.
Okay, so you don't want it to just perform well in one specific scenario.
Right.
You want it to be able to handle
all kinds of conditions.
Okay.
Ups and downs.
Okay, so back testing is the first step.
First step.
What's next?
Never testing.
Okay, what's forward testing?
So now you run it on a demo account. So it's real time.
Gotcha.
But you're not risking real money yet.
Oh, okay, so this is the final test.
It is.
Before you go live.
Before you go live, yeah.
Okay, so back testing on historical data, forward testing on a demo account.
Yep.
That's essential.
Essential.
Okay, and then what are the advantages of algo trading?
So the biggest one is speed.
Okay.
They are lightning fast.
Okay.
Especially in a market like Forex where things move really quickly.
Okay, so you can really capitalize on those opportunities.
Yeah, opportunities that humans just wouldn't be able to react to.
Okay.
Another advantage is consistency.
Okay.
Algorithms, they follow the rules no matter what.
Yeah, they're not emotional.
They're not emotional.
Okay, so you know that it's going to stick to the plan.
It's going to do what you tell it to do.
That makes sense.
And they're very efficient.
Okay.
They can run 24/7.
Oh, okay.
So you can literally be sleeping.
Okay.
And your little robot's out there working for you.
Oh, that's amazing. So you can be making money while you're doing other things.
You can.
Okay. But it sounds almost too good to be true. So there's got to be some downsides.
Yeah, there's no such thing as a free lunch.
Right.
Right.
It's not a magic bullet.
Yeah.
It can't predict the future.
Right.
Markets are unpredictable.
Right.
And you can have things like unexpected news.
Oh, yeah.
Geopolitical shifts.
Okay.
Your algorithm may not be able to adapt to that.
Okay.
And there's always a risk of technical glitches.
Okay.
Things can go wrong with the code.
So it's important to be realistic.
You have to be realistic, yeah.
Okay.
And still have that strong risk management plan.
Okay. That makes sense.
Just in case.
Okay. And so we've been talking about how markets are always moving. They're never static.
But they're dynamic.
Yeah. And it's important to recognize the different market conditions.
Absolutely.
So that you can adjust your strategy.
You got to adapt.
Yeah.
Be like a chameleon.
Okay.
Blend in with the surroundings. Okay, so let's talk about the different market conditions. What do you see?
Okay, so you've got your trending markets.
Okay.
This is where you see a clear direction.
Okay.
Either up or down.
Okay.
And you'll see higher highs and higher lows if it's an uptrend.
Okay.
Lower highs and lower lows if it's a downtrend.
Okay, so it's pretty much decided on a direction?
Yeah.
It's just going.
And it's going strong.
Okay.
Of course, there might be pullbacks.
Okay.
Retracements along the way.
Okay.
But the overall direction is clear.
So how do professional traders approach those trending markets?
So they like to use trend-following strategies.
Okay.
They want to ride that wave as long as they can.
Okay.
And they use things like moving averages, trend lines, momentum indicators.
Okay.
All of that helps them pinpoint those entry and exit points.
Okay, so in a trending market, you got to identify that trend.
You do.
And then just go with it.
Ride that wave.
But what about when the market isn't trending? What is that called?
So then you have your range-bound market.
Okay.
And this is where the price is oscillating between an upper and lower boundary. It's kind of like it's trapped in this little corridor or a channel.
So it's like a ping pong ball.
It is.
It's bouncing up and down.
Exactly.
Okay, so if you're in a range-bound market and you're trying to ride a trend,
you're going to have a bad time.
Yeah, because there's no real trend to follow.
There's no trend to follow.
So how do you approach that?
So in this case, traders will buy near the lower boundary.
Okay.
And then they'll sell near that upper boundary.
Okay.
Because they know it's probably going to bounce back.
So they're taking advantage of the predictability.
Exactly.
Okay.
They know it's not going to go outside of that range.
Right. It's contained.
Okay. That makes sense.
It's a very different approach from trend following.
Okay. So it all comes down to understanding the market.
It does.
And using the right strategies.
Okay, well, this has been amazing. We've learned so much about professional Forex trading.
We've only scratched the surface.
But unfortunately, that's all the time we have for this segment. But don't worry, we'll be back in our final segment to wrap things up, so stay tuned. Welcome back to the Profitable Mindset Podcast. All right, so we've covered a lot of ground, but now it's time to talk about risk management.
Yes, risk management. That's super important.
Okay, so what are the key principles? Where do we even start?
So step one, know your risk tolerance.
Okay.
You got to know how much you're willing to lose on a single trade.
Okay.
And overall in your whole account.
So it's more than just like a dollar amount.
It is.
It's like understanding what that means to you.
Exactly. How's it going to affect you financially? How's it going to affect you emotionally?
Right.
It's your risk tolerance. That's going to depend on your situation.
Okay.
Your goals, how resilient you are emotionally. But the golden rule is never risk more than you can afford to lose.
Yeah. That's good advice for anything in life, not just trading.
Absolutely. Don't bet the farm.
Okay, so know your risk tolerance. What else?
Always use stop loss orders.
Stop loss orders. Okay, now what are those?
So basically, it's an instruction you give your broker.
Okay.
And it automatically closes your trade.
Okay.
If the price moves against you.
So it's like a safety net.
Yeah. Think of it like that.
Okay.
It's going to limit your losses.
That sounds pretty important.
It's crucial. Forex is a volatile market.
Yeah.
And a stop loss can save you from blowing up your account.
Okay, so that's two things. Know your risk tolerance and use stop loss orders.
Two big ones.
What else?
Position sizing.
Okay. Position sizing. Now what is that?
That's all about figuring out how much capital they're going to allocate to each trade.
So how much you actually bet.
Yeah, how much you're willing to risk on that particular trade.
Okay.
So a good rule of thumb here
Okay.
is to risk a fixed percentage of your account each time.
Right.
Somewhere between 1% and 3%.
Okay.
That's going to prevent you from losing everything.
Even if you have a few bad trades in a row.
Even if you have a string of losses, you're not going to be completely wiped out.
All right, so we've got those three. What other techniques are there?
Well, there are some more advanced ones. You can diversify your portfolio.
Diversification. Okay, I've heard that a lot with investing, but how does that work with Forex?
So you trade multiple currency pairs. Don't put all your eggs in one basket.
Okay.
So instead of just sticking with like EUR/USD, maybe you're trading GBP, JPY, or BUUSD.
So you're spreading out the risk.
Exactly. If one currency takes a hit, you're not totally sunk.
That makes sense.
Another way to diversify is to trade different strategies, different systems.
So trend following and then also maybe breakout trading.
Exactly.
Or mean reversion.
Yeah. That way you're covered no matter what the market throws at you.
Okay, so diversification is key. And then We talked about this earlier, the winning mindset.
The mindset is huge.
What does that look like?
So one of the biggest things is focusing on the process, not the outcome.
Okay, now how do you do that?
You shift your focus away from those profits and losses because you're going to have them focus on executing your plan.
Okay.
Being disciplined and consistent.
Okay. So it's about focusing on the things that you can control.
Yes.
You like making the right decision.
You can't control the market.
Right.
You can only control yourself.
Okay. What else?
Always be learning. The market changes. Right. It's constantly evolving.
So you got to keep up.
You got to keep up.
What's a good way to do that?
Read books.
Okay.
Webinars.
Okay.
Analyze your trades.
Yeah.
Connect with other traders.
Okay. So always be a student.
Always be a student.
Okay. And then we've talked about risk management.
Yes.
But what does it mean to have a healthy relationship with risk?
So accept that it's part of the game.
Okay.
You can't avoid it.
Yeah.
But you can manage it.
Okay.
And understand that you're not going to win every time.
Yeah, you're going to have losses.
You're going to have losses. It's inevitable.
Okay. So how do you deal with that?
Learn from them. Don't let it destroy you.
Okay.
Take those losses.
Yeah.
And become a better trader.
Okay. So focus on the process, continuous learning, and have a healthy relationship with risk.
That's it in a nutshell.
Okay, so much great information today.
There's a lot to unpack.
There is. We've talked about the basics, risk management, psychology, so much.
It's been a great conversation.
So as we wrap up this episode of the Profitable Mindset podcast, I just want to say, Forex trading, it can be a wild ride.
It can be.
But it can also be incredibly rewarding.
It can be.
You have to be dedicated.
Yes.
Disciplined.
Absolutely.
And you got to embrace the ups and the downs.
Ride those waves.
Well, thank you so much for being here today.
It's been a pleasure.
This has been an awesome conversation.
I agree.
And to all our listeners out there, keep learning, keep practicing, and never stop striving for excellence.
That's right. And we'll see you next time on the Profitable Mindset Podcast.
Bye, everybody.